I'll call to order the Community Finance Committee meeting at 6:39 on January 20th. Roll call.
Mr. Arbogast,
Here.
Mr. Brisman,
Here.
Mr. Davis, Mr. Imhoff,
Here.
Dr. Johnson, Mr. Kohler,
Here.
Dr. Madigan,
Here.
Mr. Miller, Dr. Odell,
Here.
Mr. Spatz,
Here.
Mr. Carr Gabe, and Ms. Crow.
All right. We have 3 people present. So score brings us to the next item, public comments. I didn't see anything signed up outside. You spent online.
No.
Okay. That brings us to the approval of the minutes. So approval of the November 11th, 2025 Community Finance Committee meeting minutes. First and second.
I move to approve the November minutes.
Second.
Oh,
Oh.
yeah. Okay, Michelle, that's good. Yeah, that's nice.
Okay, second.
All right, it was Bob and Michelle. All in favor, say aye. Aye. Any opposed? No. All right, motion carries 3. That brings us to our discussion items for tonight. The first up is the review of the FY25 audit. And so we have. Okay. It's like, with Lauterbach and Neiman, here to present the audit.
Awesome, thank you. So my name is McKay Thorpe, audit principal from Lauterbach and Neiman. Been with LNA for, going about 5-6 years now. I always say it was pre-COVID, so, and I've been a part of school district's audit since we started back, I think 3 years ago now, 20, I don't know, seems about that. So can say once again, it was a very successful, clean audit overall. And that's only thanks to the hard work of Tony, Brian, Jacqueline, and Tanya for all the work that they do. You know, their day-to-day job doesn't end when we come out on site. They still have to have payroll paid and pay invoices, and then we just kind of add more stress to their plate. So, but I can say definitely that Brian is probably our most prepared client for the audit. It's quite impressive, to be honest, with the school building as large as your guys' district is. So we just really appreciate that. So to kind of continue on with kind of how successful FY25 was. So part of what we have to do is we need to take the financials and we submit what's called the ISB AFR to ISB. And so what ISB does is they look at 4 or 5 areas to determine a score. And so they take a look at your cash on hand. They take a look to see how much revenue is coming in for the expenses that came in. They can take a look at the debt that's on hand, and what they do is they give a score between 1 and 4, where 4 is the absolute highest score that you can receive. And the district once again received 4.0 score. So that's very impressive once again with how much is going on right with the district and the building and just another school district of your guys' size. Okay, so we're going to go through the large packet here. It is your annual comprehensive financial report. And we'll just keep the good news going. So we'll start with page number 9. And this is your certificate of excellence in financial reporting for fiscal year June 30th, 2024 that you received from ASBO. And so congratulations to the district on receiving this award for the FY24 financials. For FY 25, we have submitted it to ASBO. They're currently doing their review. We fully expect for the district to receive this award once again. And we'll continue on now to page number 12. So this is your audit opinion, which is kind of the main item of the whole entire audit. And once again, the district received an unmodified opinion. This is the highest opinion that we can offer. And so congratulations once again for fiscal year 2025 on receiving an unmodified opinion. Okay, we'll flip now to page number 16. So this is titled in the left-hand corner, Management Discussion and Analysis, also can be known as your MDA. And what these pages do is they provide more of a narrative of the financials. And so what we do is, as your auditor, is we help put this together. So we fill in the numbers, note the areas that were of highest increase or decrease. We send that to Brian and Tony in a Word doc form. And we highlight the areas that they would need to kind of put in their own words, just to kind of explain what's going on. As we all know, that two people can look at the same number and have two different opinions, right? So it's really great, allows the district to explain in its own words why certain figures increase or decrease. Also, there's some more charts and graphs in the back if you're more of a visual learner. But one thing I kind of want to point out here that I'll allude to later on with the GASB 103, so GASB is Government Account Standard Board. So this is a new standard that's coming out that will be implemented June 30th, 2026. So that's audit year. And what the standard is going for is GASB is looking to kind of revamp the audit report altogether. And the main area that they're looking to update is the management discussion analysis. So as you can see, it is quite long, so they're going to be shortening it up, hopefully to make things a little bit more clear. However, with that, kind of the caveat to that is that GASB is going to be asking for a little bit more detail into the increases and decreases. So we'll work with Tony and Brian. We haven't had an issue with that at all. So we just might be a little bit more annoying this time of asking more follow-up, but no concern there. In all honesty, it's going to be more like work on our end than the district's end. Okay, we'll flip now to page number 29. This is the beginning of your financial statements. Also, if you're on your laptop, it's page 29 at the bottom. So you're going to see here that this is your fund level. What you're usually used to seeing through treasury report. So it has your general, which is primarily your educational fund, your operations maintenance, capital projects, and then non-major, which would be like your tort and debt service, those kind of things. So your assets, primarily driven by your cash and then by your property taxes. These are taxes that were levied for but haven't been received yet. Then goes down to your liabilities, your accounts payable. So if you have an invoice where, so you had all this construction going on, right? A lot of times construction, they would take a little bit and invoicing the district. So if there was work done during June and May, but the district didn't receive an invoice till July or August, we would then need to move that back to have like 5 since you are on an accrual basis. And so that's what that figure makes up of. And then the next one is your accrued payroll. So what this is mainly driven by, TRS requires that information be submitted as of 6/30. So this is mainly the summer pay that's going on in July and August.
I have a question about the property taxes.
Yep.
Am I reading this correctly that District 200 books the an estimate of the second installment of the property taxes as a receivable?
Yeah, so Brian, correct me if I'm wrong, but the the district goes in towards, to recognizing at least that max 50% of tax revenue. And so then any revenue, so I think typically, Brian, I think you're typically pretty close to the 50% every year.
Yeah, so for the fiscal year 25 audit as an example, we would take the 2024 tax levy and 50% of that levy would get recorded as a receivable and also deferred to the following fiscal year because we wouldn't ordinarily receive those funds until the fall after the fiscal year had ended.
Okay, so it shows as a receivable here, and it's just an estimate of it. And when there are years with, bonds or something else, I guess that really hasn't happened for District 200 in a long time. Or referendum, potentially that formula would be changed.
Yes, that would also make up part of the receivable if we had a debt service levy.
In all honesty, in districts of this size, that's very common to see. It helps a lot with budgeting. As we've seen with Cook County, it can be a little bit tough to determine when funds are going to come in. So having this way it's nice to kind of at least know how much is going to be recognized. And then obviously the deferred items, we allude to the property taxes and then your ending fund. So if we scroll down or flip over to page 31. In the top left-hand corner, it's titled Statement of Revenues, Expenditures, Changes in Fund Balance. So this is once again at the fund level, so general operations, capital, non-major. Now this is your income statement. So your revenues, expenditures, your transfers or debt issuance, or premium on the debt issuance, your ending fund balance. So revenue mainly driven by property taxes. Expenditures, instruction, mainly payroll. And then, as I said, you had your issuances on the new debt and then transfers to the capital. So one piece of information.
On behalf expenditures, that's the TRS payments and other return.
Yeah, which those get netted out. So one thing just to bring notice, so information you can get in the general fund. It's once you want primary education. There's an increase of just over 1 million or 2%. And if you take a look at your ending fund balance at 50.4 million, it's a very healthy fund balance, which we like to see. As I kind of alluded to back, what we've seen with Cook County, there might become times where property taxes may be delayed coming in, but obviously people still need to get paid, right? And invoices need to get paid. So there could come a chance of revenue slow coming in. So that's why we like to see a healthy fund balance there, just to cover the rainy days.
Can I ask a follow-up question about that?
Yeah.
When you say healthy, do you have any either target percentage or band in mind? So
There really isn't a target. I mean, it's very case by case, right? Everybody's a little bit different municipality. We typically try to go to at least 50%, especially for the larger municipalities as yourself. I have seen where some have a fund balance policy of 3 months, but ultimately though, you always kind of want to just be around the 50%, especially if you have a lot of construction projects that are going on. And like I kind of was alluding to before, the accounts payable. It's difficult to judge when you're going to get invoiced and how much you're going to get invoiced, right? So that's why we always kind of like to see fund balance a little bit higher, especially when there's major construction going on. Just because you just never really truly know, you just don't want to be caught at a bad time.
Thank you.
Yep.
Just for the record, the district's policy is 25 to 50%.
Okay, perfect. These are all great questions too. And so then, briefly, internal service funds, that's your insurance fund. So we'll flip then to page number 36. So in the top left-hand corner is titled Notes to the Financial Statements. So I'm not gonna go too far in depth here. It's very dense material with kind of how essentially GASB provides these footnotes, and they provide us guidance as to how to complete our audit to ensure that the district is following GASB standards. Once again, GASB is governing a standard board. But some information that you can get out of these few pages is go up to see how many capital assets the district currently has. So as you guys have that large project going on, your construction in progress is going to go up quite steadily as that project is going on. And once it's completed, we'll move it out construction progress into buildings. And then also you'll see the long-term debt. There's the new item there is that debt certificate that was issued in the fiscal year. So you'll see that there's schedules there that break down by year, the principal and then interest to pay. So I'm gonna pause there before I go into the management letter. I know that's a lot of material kind of going through, but and the other kind of pages, as you can see, there's quite a bit left, is more of the statistical section, which needs to be completed to receive the Aquifer rating or title, excuse me, which Brian and his team helped put together. And then kind of other schedules in the back are the budget to actual. So if you ever want to see what the original final budget amounts were compared to what the actual is, there's some schedules in the back there too as well. But if there's any questions, please.
Right, the debt payment schedules on page 47, right?
Yep.
And then there's calculation of the debt margin is very helpful. District 200 could issue another $171 million of debt. So they say, yeah, that's legal debt limit, not necessarily appropriate debt limit. Correct. Correct.
Can I jump in with a couple questions?
Yeah.
Okay, so thank you for these materials. First question is, Tony's cover memo describes this as the auditors have issued an unqualified opinion. You use the term unmodified.
Yeah.
And these terms have meaning, of course. Which is the right term that we should use?
So it's both they both get to the same point. Unqualified is what ISB uses, and then obviously for our audit reports, we're governed by GASB, Government Accounting Standard Board. So it's you get to the bureaucratic kind of one or organization calls it one thing, and GASB, which is what we are held under, calls it different things. So, but bottom line is both mean the same exact.
Okay, so the terms are synonymous.
Correct. That is
Basically. And is it correct to say that those terms represent the highest level of an audit or outcome of an audit that can be obtained?
that is correct. Sorry.
Where in your materials does the word unqualified or unmodified appear?
That would be so your unmodified opinion on page 12.
Actual word unmodified does not appear in the document. I think it's probably not modified or something. I just did a search for unmodified. It's not there.
I couldn't find it, and I just, I fully believe the outcome, and I think it's important to cite that outcome to continue to maintain confidence among our community. I just wanted to be able to be
Yep.
thorough and be able to point to where it's actually stated by our auditors.
So, once again, we're held by GASB and they provide the opinions, the wording that we are required to follow. And so what this opinion, is based on GASB standards for what an unmodified opinion, the wording would follow.
Okay, so we can
I
use
understand.
modified as a descriptor, at least. It's less of a stamp, so to speak.
So it's basically that second paragraph under opinion is the definition of unmodified.
Correct, that's correct, in our opinion.
So
Brian,
I was just gonna say, so the way that works is that statement that's in that second paragraph, in our opinion, the financial statements referred to above present fairly, yada, yada, yada. That is an unmodified opinion. If they were to find issues or need to qualify that opinion in some standpoint, there would be additional wording that would be added there.
Okay, super. Thanks for that explanation.
What we can do for the board meeting next week is, when we do our cover memo, we can like put a slash in there, so an unqualified slash, unmodified opinion, basis.
Okay. Good idea, Tony. So my next question relates to the ISB AFR. And this would be page 6 of that PDF. And here you lay out the 5 different metrics and the formulas by which the score is determined.
Yep.
And as you said earlier, a 4 out of 4 is the highest you can get.
Correct.
Obviously, if you look at metric number 3, days cash on hand, because this is our fiscal year 2025 budget, which ended last June, we're showing a fairly significant cash days on hand only because some of that cash that has been designated to Project 2 hasn't yet been spent. So if you fast forward to the next audit, which will be fiscal year 2026, that days cash on hand level will be what I've been calling normalized into this policy bracketed level of between 25 to 50% of our operating funds. So I'm just curious if you can project out and determine if having a quote unquote normalized fund balance of between 25 and 50% cash on hand is going to still allow us to achieve a score of 4, or if we think we would probably be something below 4. I didn't bother to do the math real quick. I was just curious if you had a thought about what that's going to look like next year.
I mean, it's difficult to say, right? I wish I had a crystal ball to kind of look and see into the future. But what I would say though is that you're correct with the debt issuance, there is a flush of cash coming in. But what I would recommend is probably to take a look at the past 2 years of your ISBAFR, which I don't have in front of me, where the district was acting without the debt issuance, without the flush of cash, where to see what the scores were there, to kind of see what a quote unquote normal year would look like.
Right, Graham, when District 97 adopted its 25 to 50% policy, if you stay under 50%, your score will drop, I think, by 0.1. I think the best you can get is 3.9. Might even drop to 3.8. You can still get an excellence, but 4.0 is not achievable. And in fact, I remember contacting Senator Harmon about they should change that score because there was a lot of pressure on school districts to have lower fund balances from the legislators. But then ISB was penalizing you if you actually got to the fund balance on your financial score, if you got to the fund balance that the legislators were advocating for. So there's some mismatch there, but I think a 4.0 is not a realistic expectation going forward. The committee can certainly look at which numbers will be under, but I think it will be like 3.8 to 3.9.
Well,
Go ahead,
it's
sorry.
good thing you're pointing that out, Bob. It is kind of ironic. So, right now we can claim we have recognition, the highest level, but ironically, the level just below it, as you've described, could be actually more fiscally responsible if you consider that, the days cash on hand listed here is not due to an issuance of debt and we got cash from that debt. It's due to this sort of legacy, overly large fund balance.
The other thing about that score too is when you calculate the total profile score after factoring in all of those measures, as long as the district is at least 3.54, we would still remain in that recognition status overall. So, it is possible to have, say, a day's cash on hand be less than a 4 ranking and still be in that recognition category overall due to the weighting of the scores.
Well, that's interesting. So my last set of questions relate to the management letter, but it sounded like you were about to go into that, so I
Yep.
can hold off first.
Yeah, so are there any other questions before I jump in? Okay, perfect. So yeah, just real quick, kind of what is a management letter? So our stance is we view it more as recommendations, not as.
What page are we on?
So this would be, I believe it would be a separate packet. Separate from.
213.
It's a separate PDF in the agenda materials.
So yeah, so the way that I look at the management letter, I like to break down 3 levels. First level is more informative. And the second level is best practices. So GASB goes around and they see districts from Idaho, California, Texas, and then they come back to us and say, hey, these are best practices that you want to pass on to your districts. Then the third level is operational. So if there's in our internal control testing, if there's anything that we found that might be spruced up. But very glad to say that our recommendations are only in the top 2 levels, that there were no operational or areas of concern. So very happy to keep the report for that. So the one current year recommendation that we just wanted to make sure that the finance committee and the board was aware of is what we call your IT awareness. And so part of what we do, right, we always want to make sure that we ourselves as an audit firm are being audited ourselves. And so part of that too is we brought on a quality control member from a firm in Minnesota who also specializes in government audits. And some information he brought to us is the high risk of IT overall. And so as a firm, we decided to give this recommendation to all of our clients, mainly just to the point of wanting there to be a conversation at the finance committee and the board level, just to ensure that everybody's aware of what the district is doing to protect the district from bad characters. As you know, in the past, you always kind of thought fraud, the biggest risk was inside, and now unfortunately with AI and technology changing, it's now more external outside factors that provide the highest risk. As you can see with email fraud, and someone sends an email to Tony acting like Tony, but not really Tony. So whenever we go to the ISO, I always go to the IT meetings, and I was just said today, it makes me want to just move into the woods in the cabin and just totally get off the internet, just because all the things in here. And so just want to make clear that part of our audit is we do an IT internal control inquiry. And so us as your auditors have no areas of risk that we saw. This is just meant to be more of a conversation. so that's why we call it IT awareness.
On the IT awareness, has there been modifications to the IT purchasing policy so that risk history of breaches is taken into account and evaluating vendors, so that if vendor A is 10% more, but vendor B has had more security breaches over the last 5 years, does the policy allow you not to take the low bid if there are security risks associated with the low bidder?
No, it's actually, technology is a specialized set of rules that are not required, for low bid thresholds. So we're able to evaluate, both on, prior attacks or data breaches as well as the potential future ones.
And then those are written into the bid packets or request for qualifications or whatever, even if it's not a low bid situation.
Yeah, if we do an RFP, that'll be, written in.
So for your prior year recommendations, 2 of them were implemented in this past fiscal year. So we love to see that. That was your capital asset policy and your outstanding check policy. So those will be removed in your FY 26 audit. And then the 2 recommendations.
Go ahead just for a second. Where is that capital asset policy?
That's part of the overall District 200 board policy manual.
If you could identify it and send it to us, I'd appreciate seeing it, because I don't remember ever seeing a capital asset policy
Sure.
prior, and it sounds like it's new, so. Especially given the discussions around phase 3, probably would be worthwhile for us to make sure we're familiar with what that says.
Yeah, the expansion of the policy in this case was really additional clarification over useful lives of assets, and we already had the policy in place for the capitalization threshold. So basically, capital purchases over $5,000 with a useful life of more than 1 generally get capitalized, but then it gets a little more specific in our revision of the policy as to, what is the average useful life of a vehicle versus, a building improvement and that sort of thing. So I can pull a copy and send it to the committee.
Thank you.
And Bob, you hit on one of my 2 questions. That's a good request for the detail on that capital asset policy. And then just going back to IT security for a quick moment to clarify, did you actually do a drill down into our IT security practices, or is this more just a statement of, hey, this is topical among school districts right now, be aware of it?
Correct. Yeah, it's more so just statement of it's topical. It's we've seen a lot of clients, both school districts and other types of municipalities that have had hacking and that have had, where you have to file it's click or where the cyber insurance, security insurance. There's one school district that has filed a claim 3 years in a row, I think, or something. So it's just more so we don't want the district to be experiencing it. So as much light we can shed on it, we have to do so.
And you guys perform some higher level inquiries surrounding that, right, McCade, where you speak to our IT department and say, what kind of password requirements do you have? What type of firewalls, protections do you have, that kind of thing, right?
Yep, if there's a written disaster recovery plan, so If some bad actors were to come in, what would be the next steps to taking action?
Right.
And then back to the capital asset policy, if we could have that on the agenda for our next meeting to review it. Be helpful.
And then the last two recommendations from prior year is the deficit fund balance, which once again was in the insurance fund. And then the funds over budget, which was just seen in FY 25 in the fire prevention. And then the two informative items, so this is like the level one as it's going back to, is GASB 103 and 104. So GASB 103, I alluded that earlier on when we were going through the MD&A. Don't think this is going to be much of a change for the district. It's going to be more of a task for us as our auditors and reshaping the audit report to meet GASB standards. But so like I said, main change comes seen in your management discussion and analysis. Excuse me, and then the last standard is GASB 104, just go over the capital assets. So this one, once again, we don't think it's gonna be as challenging as 87 and 96 were, even with the one. This is primarily looking at if the districts, for example, had some land that was purchased years ago. And then the district is, a buyer comes along, and there's a lucrative deal, and the district decides to sell that land. We would just need to be made aware of it, as that would be further detail added to your footnote. But one thing I want to make clear is this is going to have to be a significant sale, so land or building. Let's say, for example, you have a server or something that you sell to another district. We would have to take a look, but an item of that probably wouldn't tip the need of having a footnote. Where it's more so looking at large items that you're building or.
On the funds over budget, and this is probably more for Tony, or I guess, yeah. It would be helpful if the percent was listed just with those numbers in context, because just eyeballing it, looks like it's less than 1%, certainly for the general. And the O&M is probably less than 1% as well. Yeah, just to give people context, I don't have to scroll back to a different document to find out what those were. That would be helpful. I don't know if it's required or anything else, but I'm certainly not concerned with your 0.7 over budget on the $100 million budget. And inflation, a few other things to drive that.
Yeah, and I kind of provide more context behind that. GASB has a requirement where if it was even over just $1, we have to include in the footnotes. So when it comes to the management letter, there's some leeway there. So it was like $500, we can be in the middle, but just but totally agree.
Yeah.
Provide.
Right, I have absolutely no problem and think it's appropriate to list everything, even if it's $1 or $2 over. It's just a matter of, if it's $1 over, that's 0.001% or something. Yeah, you're getting above single digit percents. You have major problems.
Yeah, I'd just like to say, just once again, overall, very impressive audit. Especially with all the activity the district has going on. The way things are being tracked, I think it is. I hope that Brian or Tony one of these days could maybe lead an ASBO as to how to track major projects. just because of how well it's being done. It's a unique skill that we definitely appreciate, so.
Brian, I think we just got the idea on how we finally get you to the state, so no, I just want to say thank you to our auditing firm. It's intensive process. A lot of really good communication goes back and forth so that it's we can be as prepared as possible for them, and that we're able to continue moving forward with the operation of the district during the auditing process. You know, thorough, but not one that you know, we feel like is burdensome. So just very appreciative to that, and thank you.
And I believe the finance policy has a maximum time with the same auditor or the same person, and what's the district's status on both? The person.
We're able to extend the firm, and then our policy says that we have to consider a change. It doesn't mandate a change. So that's something that we look at going forward. And that's one where the level of service as well as the cost is always a factor in this type of an approach as well.
I'll just add to, you know, that, oh, I'm sorry, Greg. I was just gonna add to you know, with an audit, a lot of times there's a very canned approach to it. You know, there's certain boxes they obviously have to check off and look at every single year. But there's some audit, you know, I've worked with probably 4 or 5 different audit firms in my career, and there's certain audit firms, and Lauterbach and Amen is certainly one of them, that you feel like they add some additional value to the service as well. I mean, the fact that, you know, they come tonight and, you know, present the results not only to the committee but then also to the board. You know, they provide these recommendations of things that they're seeing to try to help us improve, you know, even if it's not something that they directly find, but that they're seeing out in the industry. You know, we appreciate those type of recommendations and that service level as well. So just wanted to also give kudos to McCade and his team for the service they provide to our district as part of their services that they don't necessarily have to do as part of their requirements.
I'm good. Any other questions, Graham? Do you have anything else?
No, I'm great presentation. Thank you.
All right, thank you.
Thank you. Stay warm.
Yep. All right, next up on the list is the update on the Community Finance Committee charter.
Sure. Thank you everyone who had submitted changes or recommendations from our last conversation. I want to stress that I appreciate everybody kind of adhering to not replying all, so to make sure that we can stay consistent in our drafting of this material. It did bring some challenges and just making sure that all comments were noted, or if there were conflicting comments, we were able to work through them. But the updated charter has been linked and approved. And then if the committee is good with it, it will be brought forward to the board for a formal adoption.
On charge number 8, there's CSBO. What is that?
So that is actually the formal title that I have as the chief school business official in the district.
So Tony, is this going to come to the February 12th board meeting?
Yes, I was planning to talk to you and Kathleen for a little guidance on if we wanted to bring it for full presentation to the board. And that was the idea of amending the charter was discussed through the committee reporting, but because it hadn't been fully brought, they hadn't actually, the board has not seen it on paper yet. It seemed appropriate to do so.
Kathleen, do you have an opinion about that?
So the question is, should we have a full presentation of the revised charter prior to the vote?
Yes,
I think it might not be a bad idea, and maybe, it might also be useful to highlight the changes. Yeah, just so people can see where we made significant changes.
Yeah, I was gonna say the same thing, a track change version along with the clean version, plus a brief explanatory memo. And then I would envision you come to the table, Tony, and you just talk for a minute or two about the change. And then if there's questions the board has, Kathleen and I can add to it, but I think that would be a good process. And then we would vote on it on the 26th of February. I'm assuming we got to vote on it since it's a board committee.
yep.
Yes.
Thank you.
Great job on that, Tony.
So you have our approval. I don't think you need a formal, like, we're good with it, or you want a formal, there's a quick email that we're good with it. Yes. So. Space funding gap analysis update. Sure, Brian.
I'll kick it off, I'll turn it over to Brian, and we can talk through it. We, as we previously discussed, I have, some, changes and best practice that would make this a more effective tool, as we then in, the next couple months moving forward, utilize this tool for staffing recommendations. Brian and Michelle have met offline and really got a good grasp on, you know, where we may have had people categorized in one category and they should be placed in another. We were able to provide more updated numbers and data into this. So this is the most recent version that we have. You know, it's this is a unique tool because from a CFC standpoint, you know, it's it provides the ability to look at the numbers in a black and white format, and then we're able to provide that then to our academic and educational teams that can use that for decision making. So with that, Brian, I'll turn it over to you and you can talk through changes or items of note on the report.
Thanks, Tony. Just to offer a little more background into this, you know, as Tony mentioned, it's each year in the spring, we bring personnel recommendations for the following school year to the board for approval. So in advance of that date, the district typically updates this EBF gap analysis calculation, and that's mainly to help us compare the resource allocation that the district is using to adequacy benchmarks that are established by the state's EBF framework. One of the challenges, and we've talked about this before, of this tool in particular, is it's meant to serve over 800 school districts of varying sizes and locations across the state of Illinois. So it's not always a one size fits all type data tool. And it's not always clear, you know, where some staff positions should be included in the model or if they should even be included at all, as we were kind of discussing back in our November meeting. So what that means is, you know, different assumptions have been made as different people have worked on this gap analysis over the years. And I think that kind of became apparent back in November when we were kind of talking through the previous year's spreadsheet. And, you know, there were questions about, well, you know, do these people belong in this category? Are they better suited for this category down here? And that type of thing. So as work began on this 2026 version of the gap analysis, we felt it was really important to go back to the EBF cost category definitions that were published within the state's guidance. And we did not only that, but also we reviewed some of the job descriptions for those staff positions that at OPRF that aren't quite as clear cut from a categorization standpoint. And then as we made decisions there, we wanted to document the rationale for those assumptions in terms of like what category someone was placed in. So I do want to take a moment and particularly thank Michelle and Bob as members of the EBF sub-team for the time they put in reviewing these various documents, providing their input throughout the process, and meeting with me on occasion as well as we were kind of gathering this information and putting together this year's version of the template. It was very helpful for me personally to be able to bounce questions off of others and discuss the thought processes behind some of those decisions. So the bottom line is we now have a much better set of notes and procedures and such documented that will help us improve the consistency in how this gap analysis gets compiled in the future. So obviously that will be very beneficial as we're starting to look at this even closer on a year-to-year basis as part of the budgeting process. So in looking at the fiscal year 26 gap analysis itself, the end result of the work that I mentioned earlier was mainly a realignment of resources among cost categories rather than a change in the overall story of District 200's staffing levels or spending compared to the adequacy targets. I'm going to scroll down here to the bottom to start off with, but the totals for the analysis are at the very bottom of the worksheet, and the district's overall FTE count is at 117% compared to the adequacy target, while budgeted expenditures are 136% in relation to the target. And both of those percentages changed less than 5% from the previous year's values. So we're still kind of in the same place overall, despite changes we've made. That said, there were a number of changes within individual cost investment categories. And I provided a detailed list in the memo of the meeting packet, but there were sort of three main areas that experienced the most significant changes. One was the movement of staff to the central office categorization from a couple of other categories, mainly the instructional facilitator line and the school site staff line. Again, we were reviewing these definitions of the categories. The instructional facilitators category is meant for staff who are providing coaching, mentoring, ways of improving the overall educational experience and how instruction is being delivered. We had some, in previous years, we had some staff in there, such as division heads or special education program chairs, who are really more administrative in nature as opposed to providing that coaching that's mentioned in that definition. So that caused us to make the shift between those two categories. Similarly, on school site staff, we pulled some staff out of that location and moved them to central office. The school site staff category is designed more for, and this one is hard with our district being a single site district, but if you were to think of a district that has multiple school locations and a separate administrative office, anyone who worked within the actual school building in a support staff type role would be categorized as school site staff. We had some folks in there previously who, in all likelihood, if we had a separate district office, would work in that district office as opposed to in the school building. So there was a shift of some FTE between those two categories as a result. The second change comes down on the third page of the gap analysis in the additional investments section. There was a shift of staff out of the special education categories and into low-income pupil support. In the past, most of our staff who were affiliated with special education were kind of forced into the special ed teacher line and or in some cases the instructional assistant line. As we were looking at category definitions, again, special education teacher, it was really looking at staff who are in the classroom teaching special education students in core subject areas. So some of the staff that we have that pertain to programs like the SITE program, which is the post-secondary transition program, as well as others that are serving in more of a support staff role, like say a 504 coordinator or some of the a behavior interventionist, for example. Those staff members were moved up into the pupil support staff under low income. And the reason it's categorized there is, the EBF model, when it's talking about the low income categories, it's looking at risk students and support staff that are helping at-risk students. And when they define at-risk, they also include students with disabilities in that category. So there is some room for staff members who are working within our special education department, but are not necessarily performing a teaching function. So that was the rationale for moving them into that particular category. And then thirdly, more so in the middle of the gap analysis, this is under the per student investments section. So in this area, we're looking more at dollars, and there are no FTE counts within these categories. It is strictly expenditure based. But as we were reviewing the guidance, there was mention within these categories of including not just personnel costs, but also contractual services, supplies and materials, and equipment type expenses. So we made some revisions to the dollar amounts within these particular categories, especially the student activities and the maintenance and operations lines, to include some of those non-personnel type costs. The other shift that occurred here was we previously had our food service personnel included within maintenance and operations. Those staff have now been pulled out of the EBF model entirely because they do not fall under that EBF, any of the EBF type categories in terms of the definitions we were looking at. So, some dollars were added here. At the same time, because we were looking at costs that are non-personnel related, we also wanted to factor in revenues that the district brings in to offset some of these programs. So for example, our athletics department could fall within the student activities category, but our athletes pay a fee to participate in sports. We also bring in some revenue from athletic event admissions. So those revenues were offset to the expenditures to show the actual amount that is coming from the district budget to fund those types of activities. So those were kind of the three main changes. Aside from that, I really just wanted to open it up to the committee again for any further questions or discussions on this year's version of the EBF model before it eventually goes to the board for their review.
Ryan, thanks for including Bob and I in this. We're very interested in it, and I think it can make a big difference. I just was looking today actually and saw that the definition for is it central office actually had, or no, I'm sorry, maintenance and It is central office. They have security listed there, as well as the maintenance and operations as facility security. So that's the only thing that I see that maybe, and we can talk offline about it, might need to be moved.
Yeah.
Because I hadn't seen that definition, like that before.
Yeah, that one was interesting because I saw a reference to security personnel in multiple categories.
Okay,
So yeah, that's another one that is a little bit of a judgment call in terms of where we include it. And it could be, like you're saying, maybe there's a differentiation between some of the management type level of the security division versus the actual campus safety support officers. I'm not sure. That might be one we have to discuss a little further.
yeah, okay, I think my first, I do have like a lot to talk about here, so I would say the first thing is that big picture, I know we haven't really identified how much exactly we need in order to be in that revenue, or sorry, fund balance space, right? So it's kind of hard to make some hard recommendations from this committee to the board as to like, keep this, cut that sort of thing, when we don't really know that target. You know, I know in the past you had robust fund balance, so it didn't quote unquote matter as much. But so do we have yet something where we were looking for a target as you make some decisions this spring about the next year?
Yeah, I'll have to pull it up. We've got on our projections kind of the targeted savings that we're looking to hit both for this year and then future years. I'd have to pull that number up here unless Brian, I don't know if you have the projections handy. But that would be the kind of the starting point, I would say. And then it'd probably be a year to year type look.
Okay, so I think just like for future, like one suggestion process wise would be to start with that, so we have sort of the overall picture, and then two, that we would use 3-year averages. So I know, you might need this year, we're talking about what changed, you just highlighted what changed from last year to this year, but overall, it's sort of like the same pot and moving things around, but as we do start maybe having some differences, I think we should use a 3-year that for that. And then Bob and I are working on this written report, which is my fault for getting into the weeds. So I wanted to include like a lot of the research with it so that we have like a meaningful conversation rather than just numbers. Numbers are very important, but I think obviously we want to just like cut something without talking with administration and teachers, right, about the effects that would have. Like the end goal here is, the experience and outcomes for students. So we'll share that over email, and then you guys can share it with the board. So if it's okay, I do have like some really specific feedback, but let me just like put it out there before I get into that.
So can I just ask a clarifying question then? So before, because I think Michelle, you're gonna get into the interpretation of the information. So I just want to first say thank you to you, Bob and Michelle, and also Brian, Tony, thank you for the work on this. I can only imagine this is a tedious project. So it's great to have it. And what I want to clarify is, do you all feel at this point like it's sort of about as clean as it could be, so that we can, in other words, we can take this information as being a relatively accurate representation of where the expenditures are, and therefore feel relatively comfortable, reasonably comfortable making inferences based on what we're seeing.
I think Michelle and I may differ a little on this, and she can talk after me. is you'll notice particularly on the last page, is particularly the per student investments that are all over the place. You'll see 1,200%, you'll see a bunch of zeros, you'll see 300%. I have a feeling.
Will begin at 7:45 and is the locations you have on your flyer. Thanks so much, and all other people, please enjoy all of the other things going on in our buildings, through our field house and all around our first floor.
Particularly the things that are at 0%, I think the administration should put some context around why those programs don't exist or perhaps are called something different. Because I think that going public with something saying, well, you should have, 10 FTEs doing this, but you have none, I think could result in negative, where in fact they're probably in some other category. Now, perhaps the research says they should be split up differently, and perhaps the job descriptions allow that flexibility, but just looking at the job description, they're doing X and Y. So I think there is, particularly on that last page, some need to better align. And perhaps, and I would actually recommend not using this tool for the public, because it has all the stuff about K-3 and everything else that, it's a tool that's used for any district in the state. And that I think there'd be a way to combine categories to things that make more sense. The most obvious one to me is, that is the easiest to explain, is the principal and assistant principals. You're supposed to have 5.5 principals. No one expects District 200 to have 5.5 principals, but then they have too many assistant principals. And I don't even think they're called assistant principals in this district, are they?
Some,
Okay. But there's
it's
obviously.
all encompassing, yeah.
And so there's, I think, some need to translate the EBF titles into what District 200 uses. Because otherwise it's just confusing to people. And so I think there's a way to present this better. And then the other piece that I think is an important part of it is this is all based on estimates of enrollment and estimates of low income and estimates of English language students. But the low income and English learners are not just estimates of the number of people who qualify under those categories, but are estimates for the students who need extra help. And if District 200 has decided 200 kids need extra help, they should get extra help whether they fit into one of those categories or not. And for that matter, if we decide they don't need extra help, we shouldn't say, oh, you fit into one of these categories, we should be forcing you to go to a tutor. And so I think there has to be some estimate from the other side of the number of kids that need different types of services and compare that to the estimate. Because one of the things we mentioned in November, and it definitely confirmed, is that the EBF uses the Department of Human Services estimate for low income, not the free and reduced lunch. And in most districts, they are very, very close to each other for reasons that I got some feedback on. In District 200, it's practically double the number of kids who qualify for free and reduced lunch than qualify as low income under the DHS. So it's very likely that the number of kids that need extra services is underestimated by this, and you should do your staffing based on the number of kids who need services, not And that's one other delta that we should be calculating is, here are the number of kids we think need different tiers of services. Here are the number of kids that DBF says, because one of the things we potentially could advocate for is say, we think 300 kids need it, and you're telling us 200 kids need it. You should modify your formulas. And again, it may be something that works statewide, but it doesn't work for the district for various reasons. I talked to someone who was very involved with the data on it, and he said District 200 was one of the districts that did pop as having a much larger difference between those two numbers than any other districts in the state. And just, sometimes you're the oddball, but you shouldn't be making staffing decisions based on an arbitrary definition of how many kids need help. It should be based on how many kids actually need help. So that's a piece that has to go into it. And then the other quick thing is that I think for some of the things that have parent fees, whether it's the book fee or student activities or whatever, I think we should show the full amount that is spent and then have another column. Again, that's where I don't like this form. Have another column that says, here are non-property tax revenues that go into paying for it, whether it's parent fees or in the case of some nonprofits supporting things like Ping and a few others, that you could sort of say, okay, we have this other revenue coming in that helps offset that cost, so it's not going to the property tax. But I don't think we should understate how much is actually being spent on these. Again, if you're transparent about it, you're not understating it, but I think it would be better to say, here's how much we spend on athletics. Here's how much the state is basically saying we should be spending on athletics. Part of why we spend more is because we have parents who can afford to spend more, and part because it may be a board priority to do after school activities, whether it's athletics or theater or whatever else. And just be straightforward about the fact that district has some priorities that don't necessarily, that exceed adequacy. And I would expect that our District 200's after school activities, both sports and theater and music and a few others, probably exceed the state's definition of adequate. And I think the community would support that, certainly what we found a couple times in referendums in District 97 is, yep, we're willing to pay for this. You just have to say, okay.
So just to clarify the point that you just made, Bob, and I think you said this, but I didn't process it. So the budgeted expenditures numbers that are here are the basically tax expense. So if there are other revenue streams, those have been subtracted out. Is that what you? So in other words, if there were athletic fees, those have been removed.
I think Ryan said that for student activities, right?
Yes, those have been, if it was evident that the money brought in directly tied to one of these categories, then I backed it out.
Got it. So, for example.
So where you'll see it the most is instructional materials, because there is an instructional material fee charged to all students, and then also in student activities.
Okay, so for instructional materials, for example, the actual expenditures are higher than 407,000, but a lot of 407,000 is the portion that's not covered by the fees, the family fees.
Yes, that's right.
Okay, thank you.
And one other thing is, then again, this is where I don't like this form as is I think it would be good to put in context of the overall budget. This is just a ballpark numbers, probably 75% of the total budget. That when it's being presented to the public or something, there should be a pie chart of, here's the stuff under EBF, here's the total, just so that, people don't look at this and say, well, Because perhaps the better places to cut might be outside of EBF. I have no idea, I haven't looked at those very closely, but it's important to make sure that people don't think this is the entire world just because this is what state chose to base a portion of its funding on. But there's, you know, the mandated categoricals in particular are a big chunk of money, and the state reimburses some of it, doesn't reimburse others. And they've been prorating it and prorating it stronger and stronger, so more and more that's coming out of local property taxes. But by its very name, they're mandated, they're not allowed to cut them, so.
So to your point, Bob, I mean, this is already a public document, and now the state's gonna have a dashboard where you can like compare amongst. So this is where like it's what it is, but I think to your point, for our public facing, you know, we could do, you know, something else, but I wouldn't like throw this out. I think that this is like still useful for discussion here and board.
Right, I would start with this sort of as input and then combine some categories, but absolutely make sure you're able to tie back to it so that someone whose district can say, oh, they chose to combine principal and assistant principal. And here are the positions they're doing, but those two lines add up to this, for theirs, and they can choose to add up the two lines for another district if they want. But yeah, you have to be transparent about what you're combining and what you're not combining, not just pretend that the 38 categories don't exist, but just sort of say, you know, we don't differentiate our tutors between low-income tutors, English tutors, and other tutors. You know, we call, you know, they're all just tutors, and who they get assigned isn't based on necessarily their income status. Just, you know. And that might get things out of some of these neat categories, but these categories were designed for allocation purposes, not for staffing purposes. And that's the very important thing to remember. This was designed as a tool to decide where additional dollars went, not necessarily where additional dollars from the state went, not necessarily where a district should spend additional.
Well, that's what Illinois decided to say, but the actual like purpose of it from the get-go is a staffing model.
Oh, yeah.
Yeah.
Can I,
So, okay, go ahead.
no, please continue.
I mean, I have a lot, so why don't you go, Graham, and then I'll go.
Okay, you want me to go first?
Yeah.
So first of all, I think this is really good work. And I think we all understand that the EBF tool is very imperfect, but it's still better than the absence of a tool. And it's imperfect in multiple ways. One is attempting to be a universal tool across some very different districts, and D200 has its own special nuances. It's also imperfect because you've got 38 different roles here. And you really have to pay attention to both the real numbers and the percentages, because the model could say you need 4 of these, and if you have 1 of them, you're going to show up as being wholly inadequate versus the model. So it's probably really maybe a third of these roles that are most critical. And I want to ask a couple of questions about the calculator itself, but more broadly, I would see that up to now, our initial use of this model, you could call it version 1.0. Well, we're coming out of here with the help of Dr. Mangan and Bob Spatz, and this great work that Brian has put into this. We're now getting to 2.0, where we're now making this a little more precise, and we're representing dollars in more accurately in the buckets and so forth. I think version 3.0, which perhaps, Michelle, this is what you're going to get to, is next, how would you further fine-tune the allocations in order to address, I think, the root purpose of this model from the beginning, which is to help districts more adequately deploy resources to address issues of equity and the opportunity gap and so forth. So that's what I would see as kind of the next thing in front of us. This is going to go to the board. The board is going to be really interested in these improvements. But I feel like, focusing on that work to get to version 3.0, to make resource allocation more effective, I think that's where our focus should be. I'm kind of a little bit less concerned about how we necessarily present it right now to the community, because it's already kind of an obscure thing, and I don't think lots of people are necessarily paying attention to the details, but probably more the broad strokes. So with that preamble, I have just a couple of questions about the calculator itself. So first of all, the memo does a good job of allowing me to kind of map back the calculator to some of the bullets that you put in the memo. But a couple of those line items that kind of did stand out as anomalies, it looked like, was if you combine supervisory aid and school site staff, taken together, they show kind of on the heavier end of that type of staffing. And can you just comment on the particular roles that fall into those buckets and why it might look like we're heavy on those things?
Sure. So supervisory aides, that is where our campus safety and support officers are currently residing. There are also some other supervisory type aides that are, these would be like monitors within the tutoring center or other areas within the building where they're basically just providing student supervision. They're not necessarily tutoring or providing instruction. Their role is more or less monitoring students. In the school site level or school site staff category, that is aimed primarily at clerical type positions that exist in the school building, as opposed to ones who may work in a district office. So this could be positions such as division secretaries, other clerical staff who work in the attendance office, a principal's administrative assistant, positions such as that operate within the high school itself.
Okay, I appreciate that, because I see now you did have a bullet on school site staff in the memo. The other thing I wanted to ask you about was on page 2 of the model, student activities. That was one that previously it had always been showing us as underinvesting in extracurriculars. So if I'm reading the memo correctly, you made this adjustment to that one, where now it doesn't create the appearance that we are somehow underinvesting in extracurricular activities.
Right.
So that's the difference about why in the past it kind of looked like we were underfunding and now it doesn't.
Yes, and that's one of those categories that now includes some of the non-personnel costs like supplies and equipment, whereas before, previous versions of the model and student activities, we were only factoring in our staff who worked in those particular areas, athletics, student activities. There's a limited number of full-time staff there. We also had picked up stipends paid to staff to coach and to sponsor those clubs. But now with the addition of those non-personnel costs, it has changed the outlook on that category for sure.
Okay, my last question is on page 3 of the model, or the calculator, which is instructional assistant. Refresh me on those types of roles.
So that's in the special education subcategory there. So that would be our teacher assistants that work with special education students.
All right, thank you.
Right, two quick comments, as we already talked about, the student activities, while it shows an increase, is also still understating the total expense because it has the parent fees subtracted out. So,
Yes.
but then also I was just wondering about the one super outlier on here, and if, you know, someone could comment on the pupil support staff, that the model says 2.83 and there are 28 or a whopping 1,200% over. There's something going on there that you know, needs some explanation, because that's the one number that is just, I think it's the only number over like 300%. So something's going on there that the state isn't expecting. Any thoughts as to what it was?
So that's that gets to the I'm still not 100% sure that that is the correct place for some of the staff there for some of the reasons you mentioned. It kind of again goes back to where do some of these staff members belong, because formerly they were grouped in with special education because they work in special education, but there is under that bottom grouping for special ed, there's only three options: a teacher, an instructional assistant, and a psychologist. And in reality, there are a lot more positions tied to special education than just those three categories. So in years past, those positions had been kind of wedged into that special ed teacher category. This time we pulled them out because they're not actually providing direct instruction to students. They're more providing support services, whether it be psychologists, social workers, behavior interventionists, things of that nature. So the decision to move them to pupil support staff had to do with the definition there, including support staff that work with at-risk students. So we interpreted at-risk students as including students with disabilities, and then moved the staff members there. Again, based on the adequacy target there, I'm not sure that that's the interpretation the state is taking on a role like that, unless they are assuming that most of those support service type functions are being outsourced by a district. Again, that was kind of another judgment call we had to make. So we went from being overinflated in the model in the special education categories to now being overinflated in the low-income pupil support staff.
Yeah, one possible thing to look at is which staff members are covered under the things you submit to the state as mandated categorical reimbursements. Because all the dollars that get submitted under mandated categorical should be pulled out of this. So if someone's 50% mandated categorical, then there should only be 50% EBF or something along that line. That may be a place where, you know what you submit under mandated categorical, so just look for any staff that sort of submitted there and pull them out of this, because very explicitly, the EBF does not cover anything that's covered by mandated categoricals.
And most of that, that categorical type reporting changed with the implementation of EBF to where they were rolled into EBF. Formerly there was a claim that was done for a personnel grant, and it was exactly what you're stating, where a certain flat dollar amount for every special education staff member could be claimed and reimbursed under that grant. That's now gone away. So I would say that there are maybe a couple staff members that do fall within some of our federal grants for special education, but aside from that, they are now lumped into this overall EBF type model.
Yeah, I think, it's a strange, way that they decided to do it. They do list under the at-risk students that, they're using the term disabled students are in, part of the at-risk definition, but it's not perfect. In another way that we could do it is have sort of like an other special ed category, just so it is clear. Those people are really working with students who have special education needs. And that's not really like the intent of, like you said, of the definition of disability support. So. Okay, so, starting with what Bob mentioned, our recommendation is, when you go to make, like the staffing decisions in the spring, that you do come up with your own at-risk number that is different from this number, because it's really not capturing all your at-risk students. So if you really want to provide these services for them, they should be in here. So, as Bob mentioned, this is sort of like a framework and not a have to do it this way thing. It's guidance, right? And so, speaking to what Graham mentioned, my comments are more to the 3.0 piece to this. So if we look at, our core teachers, the document that we'll share with you has some of sort of like the research behind each of these elements, and I won't go into it. I won't say it out loud here, but all of this to say that, if we're at, 98% of adequacy, and we mainly are talking about the head count, then we don't see, a reason for a big change in the core teacher area. But for like specialist teachers, if we're over, and I think the district sort of needs to decide, what do we want to be in? Like, do you want a range of ±5, or, again, this goes to my first overall question, which is there, a number we're supposed to get to? Do we need to cut by a certain amount, or are we still in a place where we're just sort of like, ideal amounts? So in any case, the reason behind having specialist teachers is so that you can have time for core teachers to have a collaborative culture and environment, so that they're talking to each other and making improvements for students. So I think when we talk about some of this, might be, Oak Park loves the arts, or Oak Park loves whatever. Well, in this conversation, we want to be more focused on like the research behind some of these elements, and that is the purpose of them for specialist teachers. So we are over, but I think it's just sort of like a discussion on that, like administration and teacher leaders need to have for that area. For instructional facilitators, similarly to when we spoke in a previous meeting, this is a really high effect size category. So we would really recommend that we get closer to the adequacy target here. And so I wasn't here for the discussion of why they were cut before, but to improve, our test scores, meaning that our students are actually proficient to state standards. I mean, if we were there, then we wouldn't have to do this, but we're not there. So I would just say that if there's even only a couple that you can do, this is one of the highest effect sizes. And I think my recommendation, both in the fiscal sense and for like effectiveness, right? Like your return on investment would be to get closer in this category. So that'll be, in our email. And the same thing with the core intervention teachers, which are the tutors. We don't have a lot of these, and this is really when you have some of the imbalances in subsets of the population of our students. This is where you're going to make the difference. So it has to be in school support. And I provided, there's really specifics from Stanford's National Student Support Accelerator that'll, say, okay, this is how large the roof should be, and so they're saying up to 4. The previous research was up to 5, so, you know, whatever, but this is where we're getting into what is the most impactful. It has to be several times a week, it has to be in during the school day, at least 30 minutes, right? So the definition of this really does matter for if it would actually then make a difference, because it's a really high cost item. So this is kind of a really big area that I think that we're not providing right now that we should be. Because it's also a cost saver in terms of prevention of special education services, which are super expensive, right? So the idea of this is that you would get them before they kind of get to a point where you need an IEP or a 504. So I know that we have some, well, we have at least one person doing this. And, you know, I think that maybe there could be a larger conversation around tutoring, because some of like the tutoring center during the school day, it's not really tutoring, so I guess we can talk offline about that, but we're gonna be using resources for quote unquote tutoring. The suggestion would be to be more research based around it, so that could be more impactful. I had a question about substitute teachers. Do you know, is there a reason why it is so much more than the target?
I mean, I would say the main reason is the difficulty in attracting substitute teachers to come work for the district. You know, it's kind of the last few years in particular, it's been almost a competition between districts due to the lack of availability. So everyone kind of gradually is raising their rates to attract substitutes, and then, you know, the neighboring district raises a little more, you have to raise yours to kind of match. That would be my 2 cents on that dollar amount.
So is there like the actual number of?
Well, this is one that probably should be broken down to FTE equivalent, because there's an underlying calculation that's buried in the spreadsheet that says, if you have this many teachers, here's how many days. And so you want to say, is the number of our teachers at OPRF having more days off than you think? Or is it just that they're paying, you know, because I know downstate and a few other places, they pay next to nothing for subs. And so it's possible that the going sub rate, what is the going sub rate up here now? What do you pay per day for subs?
I believe
Say 150.
That sounds reasonable. I know a lot of
sounds okay.
districts pay 100.
Long-term.
Yeah, and it's long-term, it's longer, so that may actually be the primary difference, is just because the way it was done and at the time it was done before COVID, there wasn't the competition for substitute teachers. So again, for some of these, I think we want to make sure that both the finance committee and particularly Tony and Brian work with us to dig in to understand where the number calculation came from, to figure out, well, again, is it you're hiring more subs, or you're paying the subs more? If you're paying the subs more and that's the competitive rate, then again, that's one where you go back to the legislature and say, you know, $100 a day made sense 8 years ago, but
Right.
yeah, that's unrealistic now. The other one that I want to mention, because I know that teacher contracts are going on, is the specialist teachers are very heavily driven by the teacher contract. And basically how much release time core teachers get from their classrooms is how many periods the specialist teachers come in. And the reality may be, if the contract says X, you know, this says 33% of core teachers. If the contract it might be 40% is what the contract says it should be. And then you just sort of have to say, here's what the adjustment is. But again, it's not exactly 1-for-1 because core classes tend to be more about 25 kids. Some of the special area can be larger, some are smaller. But there was a lot of debate when we came up with that 33% number. And a lot of the Northwest Ed Red districts were saying that's too low. That we give our teachers more prep time than that. Yeah, because basically, if they're not with core teachers, they have to be with specialist teachers, so your prep time is very highly correlated with that percent of specialist teachers needed. Because kids have to be someplace. So who's teaching them?
Yeah, I'm not sure I totally follow this argument, but I also realize I came in this meeting quite late. So I don't. Is it possible that what you're describing is more applicable to an elementary setting than it is to a high school setting?
No, because
I'm not sure I understand.
If- say you have 8 periods here,
Correct.
how many periods do the teachers have to teach?
5.
There are some districts where they have to teach 6 out of 8.
Oh. Okay. Incredibly rare, but.
In the northeast,
But your point.
in northwest,
Points.
yeah, in Chicago metro, it's
That's how you-
incredibly rare.
I understand.
Yeah, or some of them actually do 7 out of 9.
Got it.
Yeah, but that ratio of how many periods you're teaching drives that core number. And I'm not suggesting you change it, but if it is what it is, then 33% may not be the target that OPARK should be shooting.
Okay, so, yeah, guidance counselors looks good in terms of being close to target, so we would, recommend keeping that. Nurses are under, but that maybe that's just the use of, what you need here. I have no idea, so that's more for, administrators to talk about. Supervisory aides is a really big one here, because we're so off the mark. And again, we need to, wherever, right, the security ends up, whatever category, it's gonna really mess up that category, but the point is that we're making a decision to spend a lot of money on this and not a lot of money on some of the higher impact things. So I don't know how we got to a point where we have so many security for, this number of students, but fiscally, I would recommend this be right-sized.
There's also a possibility that, again, the supervisory aides were thought of as like study hall supervisors and stuff, and not security. Again, it sort of mentioned security in there, but I don't think it was I don't remember any conversations about security. So it's possible that is non-EBF expense that local communities can choose to pay for or not, but instead of inflating the EBF numbers, just say, we're not seeing security. Yeah, the level and type of security you have, like security for football games and stuff like that, is probably not what they're talking about under supervisory aides.
Yeah, the people listed in here are like during the school day. So, and there are a couple of places where the definitions do mention security, so you can move them in wherever, but wherever they are, it's really like off the mark. And I think when we do get to take a look at the state level dashboard that they're releasing, then you could compare yourself to other similar districts and then say, okay, well, actually, we are similar. It's just the model, but again, it's still like a really big expense that I'm not sure, it just needs to be talked about.
Does everyone have to fill this out? No, that's what.
Well, with the new dashboard, the answer might be different.
Yeah, they have made it optional in the past, but I thought that they were moving towards every.
Right, because that's one where, you know, we've identified peer districts, we can sort of say, what are our peer districts spending for these different categories, because again, you know, maybe there's more X in our peer districts and less Y or something else.
For librarians and library aides, I would say that you'd need more of an audit of actual use and need before saying, stay with this or change it. And then principals and assistant principals, like Bob mentioned, those should be combined when we're talking about them. Now, like Brian said, we have department heads in central office. You could think about having them here. So while it looks like we have fewer, there is an argument for putting them here and then you're over. So that's just again, another like sort of discussion point to have as you make decisions for the spring. And then the other part of this, is the school site staff, which is like way off the target. So just again, a discussion about, is this the best way to spend money? What are they doing? Is there a way to be more efficient? Gifted is at 0, and I think that's okay. So for high schools, you are using AP courses, dual enrollment, and that's what we're doing. So, yeah, so it's okay. And then professional development, wouldn't recommend any other changes here because it's pretty similar to the target. Instructional materials might need to look more closely to identify efficiencies, but again, I think this is where we go to a 3-year average to see, is this really off, or is it just like we needed something in this year? This amount that EBF model provides for a 6-year,
Curriculum refresh, exactly. So, I think if you look at the way that some of this works out, like you could say, okay, we do need this much for instructional materials or, library materials. It's great transparency, honestly, And again, this is one where that's a net number, not a gross number. And so that should be transparent about the fact that they're not spending 36% on instructional materials. They're asking parents to cover whatever percent it is. Yeah, when you do go to the board with this, I would suggest providing the actual, having, I guess, additional line or something, or a note. So that there is an understanding we are actually spending more, even if it's not, the net.
Say something about. I don't.
Yeah, I'm hoping kind of end of the week, we can email it against my fault, not Bob's.
Oh, no, I'm not putting figures at all, but you're combining all of what's in.
So that's a big girl. Yeah, it has the research studies too.
I thought you could.
School year. So wonderful that
That was our principal. Where did she fall?
She's good. She's in a good category.
You're supposed to hire another 4.5 principals, by the way.
Yeah, I know.
The 3,000. 5.5 high schools. One for every 600 kids.
Assessments is another area where we are really spending a lot more than the $34 per student, that this is for like formative assessment. So that's another area for discussion with administration as to, is this an anomaly of 1 year, or if not, why would we be so far off?
Did you say that it is specifically for formative assessments?
Yeah, they have the definition that you could like use some to monitor the some of it, but it's really performative, so benchmark, you know. What else?
I wonder what's been backed out of this number, Brian? Not that, I mean, we can look at that offline, but that's a question I have. There might be. We might be capturing more dollars in here that we need to in that direction.
Okay, yeah, like benchmark, interim, formative.
This is STAR testing, it's. Yeah,
Also potentially has some special ed assessment buried in there.
absolutely, but math testing, but it's not necessarily like AP test hours, those are different, those are not formal tests.
Those are not- So that's interesting, okay.
And who pays for the AP test these days?
Well, parents pay, there is school costs, but there's a significant cost to parents. And then. Less. Depending on sense.
Okay, so for computer and tech, even though we are over, I wanna provide context here, so. The amount that they are saying, which is what, $285 per student. That was, so this was like in the year 2017, okay, when we didn't all have one computer for each student, it was before COVID. So that's how much a 3-to-1 ratio is. So, a 1-to-1 ratio, per student costs $350 per student. And then you need, right, the software, you need other equipment, all that sort of stuff, so, not in Illinois, but on a more national level for EVF, the recommendation is more like $450 per student. And we're spending about $431 per student, based on these expenditures. So we wouldn't recommend any allocation changes, even though it's not in line with what Illinois is saying.
Right, and that actually is a great example of what I was trying to illustrate with substitute teachers is I think it is perfectly reasonable for OPART to look at the details of some of these calculations and say that state number is just off. Here's what our standard is going to be, and then how do we compare to our standard? Rather than just, and make sure you're transparent and say, you know, here's the state standard, here's, you know, a national standard that we're going to adopt because we think it's more realistic than a 1-to-1 computing. And then I could make a strong argument that after doing that, this committee should write something that goes to all of our legislators and say, here are the ones that are really off, please. And frankly, to the professional review panel, of which there's at least one person in OPART serves on that. So we can connect with them and sort of say, here's some feedback and at least get it into the process because, yeah, you don't want to be compared against a standard that doesn't make any sense. You don't want to say the state standard doesn't exist, but being transparent and saying, state standard was adopted in 2017. It hasn't changed as fast as it should, I think is very good. And then from the community standpoint, if the high school agrees that it should be the standard and you're underspending it or overspending it, then it's fair game to say, you know, how are you going to get there? But what you don't want to do is have people waste time picking out some item that's, you know, the computer thing at 150% and say, oh, you should be trying to get it down to 270. It's like, no, you shouldn't. You know, that's just a waste of time. So I think that there is some communication aspect to reviewing these targets. And that was also the idea about the core teachers versus the specialist teachers. Say you want, you know, kids to have 2 specials a day, then here's how many teachers we, you know, here's how many teachers we need. You wanna only have your kids have 1 elective? You might be able to offer it cheaper, but I don't know any parent who's asking for their kids to have less electives.
Student activities, we are pretty far off the target, and it sounds like even more since fees have been subtracted from it. So again, that's just like a value judgment, so it's something for board and administration, everybody to make a decision on. So I'm just gonna leave that at that.
Just real quick on that was another one where the Ed Red district said this number is too low and it was a political compromise to accept this number. So I would expect if we look at our comparative districts and nearby Ed Red districts, that they're all going to be over.
I
Not
did-
that that's rationale for doing it, but it's, context.
Yeah, I did reach out to someone at SB, and this number for high schools is the average, but to your point, the average is not our, comparison, so just.
Yeah, no, that's where it came from.
Yes.
It was literally the mathematical average of all the high school districts.
Yeah, and they do, every year it changes, so they are keeping up with that. That's the formula, okay. So maintenance and operations. So we're over the target. Just the FTE part of this is also really off the mark from even like a national average. So if we just took the part of maintenance and operation that are the people, we should be at about 4% of our total employees, but we're at about 9%. So that's just another area for talking about and why would that be? Is it necessary? Is it a legacy? That sort of thing. I mean, we might just have never, sometimes not just schools, but organizations just kind of add on, right? And then you get to a place wait, what are we? So that would be a recommendation there to look at that. Central office is also over, but again, we have moved the department heads in there. So, wherever they end up, who knows, but you're over target with that. Employee benefits should be at 30% of salaries. I'm gonna stop there, and we can email you guys the rest, but we really wanted to provide the research behind why these are.
I love it.
And part of that email will be some recommended next steps. So we'll discuss that at the next meeting, see whether or not people agree with that. Some will be administrative next steps and some of that will be committee next steps.
Everybody. All this stuff. So, yeah, you helped write, you did this in the research, right?
Yeah.
Yeah.
Based on just what I've heard. Really sure. Really.
I have no clue
Very sweet.
about the researching this, I just heard.
It's great, thank you so much.
All right, that ends our discussion for tonight, and then otherwise just in the packet. This is just stuff that Cal asked for that we're about to include. And it's your information on the financial reports, so where the investments are as of today, so just have that information. Just if you have questions on it, you can ask it, but otherwise it's just there for us to see on a monthly or on a meeting basis. All right, future agenda items, next steps. I wrote down the capital asset policy review. Anything else top of mind?
Probably recommended next steps for the committee for EBF.
Okay, this.
Yeah.
Here's 1 second, let me put my calendar up. Okay.
Or you might.
I'm just wondering because how does it align with your, talks with teachers, that sort of.
I guess that's for me. This is a long-term conversation anyway. We should recognize that, right? But the reason we're discussing this here is because really it's time to bring staffing recommendations to talk about today, our distributions, staffing recommendations forward for discussion and approval is in March. And so while this will inform those discussions, if there's a significant kind of shift in one area or the other, or generally how we're looking at this, to help make those decisions going forward, that will have to be realistically a 2-3 year longer book. Does that make sense? There are some things that you shared that we have discussed around the table already going into this year, so there is some overlap right now. But until I get your email, it's not a cost.
And so what's the date, sorry, April 21st is our next meeting.
Okay, so. I mean, you can take, you know, what Brian presented. And use that tomorrow, you know, right? So. I would hate to not see any movement though among the categories. For the next school year. I mean, that would be a real opportunity for us, not just fiscally, but for student outcomes and areas we're working on. Trying to get your attendance up and all that sort of stuff, and this all affects that, right?
Yeah, there are some categories you would think that weren't, that we've already begun to discuss. So I understand that. I think that's exactly right-minded. Until we see this whole thing packaged up, I think it's hard to know exactly what the strategy.
And for me, I think too, that email, then I think that with the research base that you're putting together, I think will help provide a lot of the filling of the gaps as we have those internal conversations as well.
Okay, and I don't know if like your HR person gets involved in this, but you know, Bob and I are always available to talk as well. You know, I guess I'm a little like, even let's say that this didn't exist. If this committee is supposed to help with the future, you know, not solvency is not the right word, you know, health, fiscal health, but there isn't really a recommendation from the committee before these staffing changes are made. I mean, that's like 80% of your budget. So I guess I'm just like, what? I saw our purpose, right, on the charter.
Are you suggesting that the timing of this doesn't allow for the impact that you?
Well, yeah, I'm like, you know, the fall meetings that we had, right? I loved how it was a longer term look, like a 3 to 5. And so for me, I mean, we're already then losing a whole year. If no real change is gonna be made either to the bottom line or for resource reallocation within the pod.
Yeah, I don't know how to, I mean, it is possible that EBF conversations could be had earlier, but only to some extent, right? And I do really want to stress that when we're talking about changes to staffing throughout a building and all the various categories that it exists, as you well know, these are not short-term fixes, right? Where information that we get in maybe November of one school year can immediately be applied to make big changes forward down the road. Let's use one example. Let's say, and this is purely hypothetical for anybody listening, but you can see immediately how this gets, right? You're 9% to 4%, right, that you mentioned earlier regarding our custodians, buildings and grounds. Okay, so let's say we say, okay, we don't need to shift long term to go, want to see that closer to 7%. Okay, that's not gonna happen in one school year, right?
Yeah.
Staffing side, so that's part of a longer term approach. But all of that is to say, again, it's hard to know kind of what the strategy can be until we need to see it.
Okay, I mean, we did essentially say the same thing in November, you know, it just wasn't written. So I guess back to my question about our purpose. Are we really making any impact on, you know, the fiscal health of the district if Because you had this last year, right? You had it and it sounded like the categories didn't really change. It was like, okay, this is like a good starting point, right? It's like, we didn't know any measures, what should we be trying for? But then there were no changes, really, like significant changes. So now it sounds like one of the options is to also not make significant changes this year. Yeah. So for the impact of this committee, I'm sort of like, I want us to use our talents and time, right, effectively. And I don't know, Graham or Kathleen, if you have opinions on this.
I am also working higher ed, so I'm pretty comfortable with the long time horizons, and I think. I myself am just learning the different timelines and cycles of things, but I think it does. I think the work that you've done on this is tremendous, and I think can really inform the discussions that we'll have. I think in the 5-year projections, there are some spending reduction targets, and I think we can come back to those and see, okay, what are those spending reduction targets? And can any of this work help to inform where to focus from? I think there's a lot of real potential, but I think it feels reasonable to me that it would take a couple of academic years to really, I think what you're proposing is using the tool differently than it's been used before and laying it on top of a lot of processes that are just long term. So to me, it feels about reasonable that we begin these conversations now, so we'd be really well informed in the next cycle, but I think it might feel it would feel very fast to me to do implementation, like real implementation of some of the changes that you're making based only on tools. So that's sort of my initial response. But also, I think, this will be, as we get into reviewing the budget with the board, there's a lot of what you brought tonight that can inform those conversations. So I think it's both. But I don't feel, I guess I don't personally feel frustrated by the timeline. Feels reasonable to me.
What about just like the bottom line, like forget any of the categories, like.
I will say 2-3 years ago, it was. I'm not trying to speak ill will of any board members that are no longer on the committee or no longer on board. But previous iterations of board members, outside of Tom, who attempted to focus on this, I don't think many board members are rolled up. They ever care about this sort of, but I don't know the focus really on this prior to Tony starting. I also don't know that they did a good job of actually doing something with this model and putting numbers.
The fund balance, they didn't really, like I said.
Well, between COVID and the fund balance, COVID changed the priorities, plus there was influx of money and a few other things. So
And their priority was also was always projects, project 1 and project 2. So that was all we talked about every meeting was that stuff. And so we didn't, and now that you guys are on board, and I think we're at a more normalized conversation with like any future spending, that it's not gonna eat up 90% of our time. It's more gonna be like equal weighted. And your guys' expertise on this stuff and that stuff, I think there'll be more focus. Even if not in your initiative next year or like next year.
I would say, go ahead.
I was gonna say, I think it's also important to avoid unintended consequences. I knew of a school district, elementary school district, that had a lot lower operations and maintenance, basically janitorial than District 97 did. Well, it turned out they closed their buildings at 3 o'clock and didn't allow any after school activities in their buildings. Because they didn't allow the park district in, they didn't allow the PTO in, it's just like, okay, you're saving money on your janitors, but you're not letting your buildings being used, this is not a good community decision. And so some of these things that get rolled into these state averages, we need to make sure.
Yeah.
Whether or not it's that, and so I think, part of the next step is making sure that. The targets are well understood to figure out, is there a reason why you're over or under? And if there is, again, adopt, potentially even have the board adopt a target that's different than the state and then compare to that, but until you get enough knowledge of it, these state numbers are so all over the place that they're research based, but they're also, in some cases, a lot of averages thrown in for political compromises. So,
If I could step in and provide my 2 cents on this, you may recall in the summertime, I articulated a vision for an enhanced capability and skill set on the CFC, greater substance and impact of the CFC. We were fortunate to enjoy now a tremendous team here and a lot of knowledge. And so now what's happening is the vision is beginning to manifest, because on this topic, we created a sub-team, the Mangenspat sub-team, which I would argue contains some of the best knowledge and thinking on this topic in the entire state of Illinois. And I believe that the board, the full board, endorses and is excited by and wants to leverage the capability on the CFC. So what all that means is that we will be eagerly anticipating the memo that you've described, which I think is going to be really helpful for Kathleen and I to anchor into beyond just kind of the verbal rundown. As to the speed of application of the ideas and the insights, I can't say that just now, but I can say that the full board's going to take it very seriously and look for ways to apply the learnings, the differentiation, the impact toward the district's goals, such as addressing the opportunity gap and ensuring all kids can fulfill their potential. That's going to get an absolutely serious review and a seeking of ways we can apply the work that you're doing.
Yeah, I figured that, especially about the opportunity piece, because that affects these freshmen that just came in, right, tonight. That will affect them this coming year if, we aren't able to, provide some of the supports that they need to actually close that gap. I think that, Brian and, I think that, and Tony, I think you had a graph where there was, like a slow, rate of change, for, what's this one had, like, I don't remember which one this was, but anyway, I'm envisioning, I do understand and envision, like, it's not just like, okay, make all these changes, but I definitely wasn't thinking that we would make changes for next year, because I thought that,
Well,
Yeah, I don't think you heard that though.
oh, okay,
yeah,
okay,
You heard from me.
and what I was going to say too is, I think, I think we're actually having this conversation at the right time. Historically, it would be a February conversation that runs along with staffing. So it's almost like, here's our numbers, here's what we think is the best way to tackle this staffing
That's right.
forward. What this does now is, with the CFC role being advisory, we can take all of this, and then when we internally have our staffing conversations, we know where, not just from a fiscal standpoint now, where the CFC wants to see alignment, but now what, with the background information that you're providing, where, the research says we could see an impact in relation to our achievements here. Well, can I say that it will shape every decision that gets made? No, but it will definitely be weighted heavily at the table.
And again, I just reiterate the first thing I said, I think that working with unions and working with staffing realities, programs that are currently in place, all sorts of reasons. Doesn't have to be glacial, but that doesn't mean it's immediate, right? And so I don't think that we're gonna see huge, major changes in how staffing functions at the high school. By no means did I mean to suggest, imply, or any of the ones that this is important for the school. I hope that's not how it came from.
Right, anything else that you'd like to go? Extra? Can we get a motion to adjourn?
So moved.
All in favor, say aye. Aye, any opposed? No, all right. Meeting ends at 8:54 p.m.
So what did I miss before I came?